Hello fellow traders, Marv Eisen here for Timeless Dollar Trading Academy. We're entering the week, we're beginning the week trading on July 14th, and so we have to see where prices are likely to go. And I want to take you to the big picture, the S&P chart, and notice that the S&P, although it has risen very smartly over the past couple of weeks, this is the one-day chart of the S&P. We can see it's sort of finding resistance right around 62.75, somewhere around there. And typically, we have to be a little retrospect, particularly with regards to the tariff situation. And tariffs, of course, are going to be a negative effect on the market. And so we're looking at how to trade day to day. And on Friday, July 11th, prices opened up well below the calculated trading zone. As we all know, prices are going to very likely trade well into the trading zone. So should we take a blind trade with prices opening up? Well, we can actually do that, because as prices moved on Friday, we can see prices originally faded the trading zone, went up toward it, faded it, and then moved well into the trading zone for the rest of the day, okay? And so here we go on Friday, but there's some more indications that we can watch for over here. And as you know, I only use the Taylor trading zone and the stochastics. Now there's something else at play over here, and that is a support line that's being put in by prices. I'm going to stop the video and we can look at prices putting in support right at this point over here. And so prices being supported at this line. And so we can use our stochastics to place trades, knowing that prices are going to move to the upside or having a good indication. Place a buy order at the bottom of the stochastics, at the oversold stochastic, jump off at the top of the overbought stochastics, wait till it's oversold again, make another buy at the bottom of the stochastic. So again, the trading zone was sort of accurate, because we can clone our trading zone to the intraday low, because as we can see, intraday low was not taken out. The intraday high was taken out. And so we can clone our trading zone to the intraday low right over here. And that's where prices were going for Friday. And so using the stochastics, using the trading zone, using the support and resistance line. Remember, there are only 6 trade setups: gap, support and resistance, time and price, trend, momentum, and candlestick. Support and resistance, okay, and we can see support being put in with the trading zone guiding us into a higher level on the market on Friday. And so, not that it was an easy day to trade, but it was a day where the indicators were there and were there to help us. So let's see what happens on Monday, July 14th. This is Marv Eisen for Timeless Dollar Trading Academy. Trade safely, use lots of patience. Thanks so much for watching, and I'll see you in my next video.